Thanksgiving all through Christmas and Hanukkah and New Year's and the holidays, and so it's been quite a ways that quite a bit of information that we have for you. Dennis has been working on that, so he's really excited. We're really excited about being able to offer this to you. Let me just do that. A couple things. One is that this is we're going to keep you on mute, and what we'll do is Dennis will give his presentation, and then we will open up the webinar for discussion. You'll be able to unmute yourselves, and if you have any questions in the meantime, you can add them to the chat. Also, this is being recorded, and the recording, so that you are aware, if you want to keep your video off or your audio off, please go ahead and do so. These recordings will be posted on the Fordham Road Collaborative website.
Okay, Robert. Good morning, everyone.
Well, let me just let me get to this.
Yep.
And I hope everybody can see that. So there I am. It's Robert Brancatelli. That's my email. And we're again at Fordham Road Collaborative. And Fordham Road Collaborative is at fordhamroad.net, fordhamroad.net. Also wanted to just remind you too that we're at the Kushner Report. If you go to fordhamroad.net, you'll be able to see the Kushner Report and that link to video. So we'll have a copy of this one posted, and if you're interested in previous videos, just let us know, and we can supply those to you. And again, most of you know Dennis. I want to thank him for being. Dennis is a partner with Fordham Road Collaborative. He's based in San Diego. I want to thank him for his expertise in doing this, and he's very excited about all the information that he's been able to gather for over this. It's been what, almost 2 months now. 2 months. So. Dennis, it's all yours.
Okay, good morning, everyone, and welcome to the Kushner Report for January of 2020. You know, as the year unfolds, we plan to provide you with insight to various business sectors on a monthly basis. So, for example, today we have 2 special sectors we'll talk about, and as we go through every month, we'll have another special sector to discuss, give you some better insight into what's transpiring. So welcome to the report, and we'll get started. Okay, next, go ahead. So first of all, today's agenda will be to talk about the key economic indicators, the global economy, the domestic economy, mergers and acquisitions, and other significant economic news, and then what's ahead in 2021 at this point. So basically, economists have put together 5 or 6 key underlying assumptions. So for example, we're talking about the US economy does not return to full lockdown, but more restriction could be put in place. And the good news is vaccines will become widely distributed in the first 6 months of the year. And the new norm to return in the second half of 2021. And of course, Congress is now discussing a new package, if you will, physical package for sometime in January or February. So those are things that are on the table right now as we move forward. Okay. Next slide. Okay, Robert, the next slide.
Past key economic indicators?
Yeah. Okay, so what we're going to talk about first of all, no, go back, I'm sorry, excuse me. It's me. So let's take a look first of all at the key economic indicators: inflation, unemployment at the federal level, the California level, and of course the price per barrel of oil. Now, fiscal year 2020 global GDP is projected to go out at a negative 4.5%. We're still not going to know some of these numbers probably until the latter part of February. This is initially. So in the global GDP for 2021, we're looking at an upturn of 4.4%. So that should be very good. The United States is projected to go out this year at a negative 3.5%, followed by an increase of 4.6%. And we'll see most of that occurring in the second half of this year. Inflation went out the end of the year in the United States at 1.4%. And is projected to go up to about 1.9%. As the economy continues to improve, so will prices along the lines. The unemployment number came in at 6.7% for the federal level in December, and the unemployment rate next year is projected to go out around 6.6%. So again, it's going to be a while before we get down to the 3 and 4% level. California unemployment went out in December at 9%, and followed by a projection of 6.9 for 2021. The price per barrel of oil is going to go up. The range is looking more on the lines of $50 to $65 a barrel. Keep in mind, many of the nations in the Middle East, along with Russia and other countries, have curtailed a lot of the production levels. So we'll hope to see those levels come back online as we move further into the year. If not, you're going to see more hikes at the prices at the pumps. So let's talk a little bit about the global economy. The global forecast, if you will, has generally weakened since our last discussion due to the COVID situation, because it's run up rapidly throughout Northern Hemisphere, where it's been very cold and people have been isolated and had to stay at home. So the economies have been have suffered substantially over the last 3 or 4 months. Looking at the Chinese situation here, China is basically investing heavily in computer chips and stepping up efforts to cultivate homegrown talent as it accelerates its quest for technological self-sufficiency amid a trade war with the United States. And this is going to continue to go on. So if you can imagine, last year, more than 50,000 Chinese companies have registered their businesses as related to semiconductors in 2020. That's 4 times what we've seen 5 years ago. Now, Chinese semiconductor companies have raised almost $38 billion last year through public offerings, private placement, and asset sales. So they're putting a lot of money into their economy to develop chip technology. So if we take a look at Canada, Canada's economy is coming back much stronger than many other countries, and they're on record for doing a lot better in the last half of the 2020 session. Brazil has been years with problems with inflation, and now their inflation is up, going out in December at 4.5%, which is really having a negative impact on their economy. Economists believe that their economy will fall short of key activities in 2021. And of course, the lockdown situation, again, as I said earlier, remains due because of the continual spread and lockdowns because of the COVID virus. So we'll see what happens, and hopefully they'll be able to start distributing some of the vaccines that we're seeing coming in from other parts of the world as well. The Chinese economy last year grew at 2.3%. Normally, they're somewhere between 6 and 10%, so they've had a major impact as well. Their fourth quarter was very good. They grew at 6.5% in the fourth quarter. And just coming across the wire 2 hours ago, since I was up early this morning at 3, just came out that the announcement this morning by the federal government is that the third quarter GDP estimate is now at 38.3%, which is unbelievable. And the fourth quarter now is projected to go out at 6%. So this is very good news this morning coming across. What I want to talk about, just jump down here, the economists from UCLA are looking and seeing that this is going to be a robust year for the economy. Now, I believe it'll take place in the second quarter of 2021. The next few months, we expect it to be sort of a tough time, especially in January and February and early part of March, until things get going with more openings, if you will, and the vaccines being widely distributed. But California's leisure and hospitality market is not expected to recover until sometime in 2023. So we have a great deal of people working in those sectors. So they're gonna suffer at least for the next couple of years. And the Federal Open Market Committee met yesterday afternoon, and consistent with what I talked about in November, things are going to be relatively unchanged for the time being. So we're going to see the rates staying relatively flat. However, they've continued to agree in the new administration that they'll continue to purchase $80 billion in Treasury securities and $40 billion in mortgage-backed securities. So that's the good news on that part. Now, what I'd like to do is take a look at at what we're doing here as far as the population. So in California, if you can believe this, for the first time since 1900, the California growth declined. So this is going back to 1900. And in the United States in general, it was only up 0.4 of a point. So now they're saying that in the United States, we have 329 people living here. which is quite interesting. Now, looking ahead, which I think is important, the presidential election is now over. The new administration will be faced with some serious issues that will impact the country over the next 4 years. There are so many pending issues that must be addressed. So the fundamental areas of taxation, regulation, spending, and foreign policy are critical variables that will set the stage for continued growth, or we could face a significant contraction, penlight of the past and the COVID pandemic. These are really uncharted waters at this time, and we'll see how this unfolds as we move into the year of 2021. Now, what I wanted to do is I talked about looking ahead. So what I'd like to do is kind of address the automobile industry for 2021. So the future of the auto industry is expected to be more buyer-centric, flexible, and convenient. The emergence of new technologies and the switch of customer preferences towards more suitable solutions have brought innovative changes in the automobile world. So the auto sector is now entering an industrial evolution with the rise in the fourth time this has occurred. So vehicles are now connected to the internet, so we can expect the growing trends to reinforce manufacturers' efforts to build vehicles that are more than just cars. If you can choose to buy a car, such as Mike would like to buy a car, and instead of basically taking the subway or the airplanes, there will be a rise in the desire of people to own vehicles as we go forward in 2021. What we did see is that the buyers are really looking to look at different types of vehicles versus whether they be electric or the traditional types of models. But again, this is going to be primarily determined by pricing of vehicles. It's always going to be a key factor. In 2021, the dealerships are expected to add new services to their portfolio. So for example, there'll be alternatives that you'll be able to choose rather than going in to visit a local dealer. For example, you'll have virtual test drives. You'll be able to see video conferencings of the vehicles. You'll have it at-home test drives. A friend of mine has done that. And you'll be able to see digital showrooms and then review videos. So it's a whole new way of moving vehicles in the marketplace. And again, keep in mind the Internet of Things is more modernization of the automobile systems are connected, and therefore you're going to see a lot of vehicles that'll have access to data, and we'll see more communications devices involved with the automobiles, and therefore you'll be able to see downloads and have downloads and patches to your vehicles. So we're moving very quickly with technology in that industry. Now, the real estate market is something that's very near and dear to everyone's hearts. And what we're seeing here, basically, there's some key elements about this. Go to the next page, Robert. Okay, one more. So let's take a look at the real estate market. And this is for Kathy. So most of the housing bubble worries stem from the resurgence in home prices. Well, the median price of an existing single family home has surged 15% last year. Can you believe that? 15%. And the price spike, however, is the result of sudden increase in demand for housing rather than just pure speculation as we've seen in the past. But the surge in remote work, remote learning, combined with increased proportion of time that people are spending at home, has really set off a race for living space. And this will continue for the time being. The biggest concern we have right now in the banking industry are the foreclosures will increase once moratoriums end. But economists doubt that there'll be a surge in foreclosures once forbearance programs will end. Now, the move back to the cities is going to be very interesting. If you go back a few years ago, companies in San Francisco, such as Yelp and Twitter, etc., moved into the cities with their corporate offices. Therefore, people were buying townhouses, condominiums, and willing to pay whatever they had to pay for to rent housing. Ever since we've had the impact of the COVID-19 virus, what's happened is in New York City, Los Angeles, and San Francisco specifically, people have left the cities for other locations. Now, the question comes back, how long will that last? Will people ever return? I think at the end of the day, when the vaccine comes out and we start moving more back to normalcy, I believe we're going to see people coming back to the cities. But to what degree and how long will it take? That remains to be seen at this point. But that's going to be a real interesting situation going forward. The other thing that's interesting is following unprecedented spike in initial unemployment claims at the start of the pandemic, there was great speculation about how many people would have trouble paying their rents. And therefore, there's been a moratorium by state and local governments to preclude people from being evicted from their homes. but that amplifies the fears that the landowners have of what's going to take place once this is over with. So that's something that's going to be have to deal with. The problem we have right now is the surge in the pavement problems are really in the lower income areas. So that's where we're having a lot of problems. And many of these people are very far behind in being able to catch up with rents. So that's something we're going to have to deal with going forward. And finally, the good news is economists see home sales and new home construction strengthening further in 2021. They're looking for new sales of homes to go up by 16%, which would be the strongest year since 2006. So that's very positive. Now, some of the existing single family homes are expected to rise 4%, while the sales of existing condominiums and co-ops should rise around 2.6%. It's also expected that we're going to see more inventory in the marketplace at a moderate level as we go through 2021. So that's going to be very good for those in the real estate market. Just a real comment on what I would want to talk about. The commercial real estate market is going to go through some real trying times for the foreseeable future. As you know, a lot of people no longer need to be in their offices. And in some cases at Google, Apple, and other companies have indicated that some of their employees have an opportunity to never have to work in the office again, come in periodically or not come back at all. So you're going to see a real change in the demand for space. So we'll see how that evolves over the time frame we're going forward with. Okay, so we can go back now to those economic indicators. So let's take a look at what's taking place here. Go on, go ahead, one more. Next, here we go. So let's talk about inflation. So inflation in December in the United States was out at 1.4%. That was a slight increase over 2019's 1.2%. As I've told you earlier, we're looking at 1.9% or higher as we go through 2021. Trade exports were up again over November, and we're seeing them rise. They rose at $252 billion. We'd like to see those numbers go up more. The trade deficit has really hindered the United States. It went out in the month of November at $68 billion. If you go back a couple of years ago, we were running somewhere between 45 and in the 50s, but now it's up to a staggering level. Hopefully that will change as we start seeing the economy coming back. Retail sales in the month of December fell 0.7 of a point. It was the third monthly decline. However, sales last year were up 2.9%. Now, the employment picture, let's take a look at the employment picture on a federal basis. Okay, we can go to that chart, Robert. So in December, payrolls decreased by 140,000, and the unemployment rate remained the same at 6.7%. If you look at the chart, you can see business and financial services across the country added 161,000 jobs, and construction was strong at 51,000. Go down to the middle of the chart and look at leisure and hospitality. We lost 500,000 jobs in that arena. So if that had been more reasonable, we would have had growth in the job market in December of last year. But that's where we stand right now. And the next slide will focus on the California economy. So I know a lot of you live in Washington, D.C. and Oregon and Boise, Idaho, etc. But in terms of California, which has 40 million people living here, we saw a decline of 52,000 jobs. And the unemployment rate, unfortunately, went up from 8.7 to 9%. So there was a slight improvement in a couple of the categories, such as construction and business. But look down below and you'll see 117,000 jobs were lost in the leisure and hospitality space. And that, again, that's systemic across the country. Okay. So now we talked a little bit about that. So the interest rates, as I've mentioned, the mortgage rates basically are staying about the same. The range now is around is between 2.5 and 2.85 in January. And we're going to see rates relatively temper the same as we will for the time being. Again, keep in mind, by interest rates being low, that helps the federal government with the trade deficit and everything else, keeping rates pretty low. Manufacturing, we're seeing the strength of the U.S. manufacturing appears to have been largely unshaken despite the recent surge in the coronavirus infections. The Institute identified the index for December at 60.7. Let's go back a few months ago when we dropped below 50. When you drop below 50, the signs are you're either in a recession or you're going to be going into a recession. So this is very good news. Manufacturing is still very strong. Factory orders, the good news is we continue to see an increase. For the 7th month in a row, we were up to $487 billion in that particular area. So that's very good news. Okay, next slide. So small business confidence level, unfortunately, that dropped in December to 95.9, down almost 4 points, 5 points from the November area. And the concerns are more funding for small businesses and what's going to happen. When will they be able to open? Now, the government announced last week, and so do the guys on Wall Street, they estimate that 60% of the businesses that are closed today will not reopen going forward. That's pretty devastating to the economy. And we'll see what can be done about some of those. But those companies are gone. In San Diego, there's several restaurants and small businesses. They're gone. They're closed. They're gone. They'll never come back. If we take a look at crude oil prices, a couple of months ago, we were in the $37 range, and it closed within a week ago at almost $52 a barrel. And so what we're seeing now is the prices going up at the pumps. It went up 10 cents a gallon today, this morning, if you will, or last night at Costco. So it's going to continue to rise as more people are back on the road, driving and looking for work or getting back to their offices. So we're going to see that continue to go. I mentioned earlier, the range is between $50 and $65 a barrel. Housing starts. So the housing starts posted a 5.8% increase in December, which was very, very strong, continually along the same ways we've seen for the last several months. New home sales in Southern California boomed. You can believe in December they were up 10.1%. So that's very good news in that particular area. Home sales in Southern California, for those of you that live here, Los Angeles County, for example, the median price of a home went up 11.4% to $700,000, while sales were up 26% in December. Unheard of. Orange County, the median was up 8.2% to $795,000, and sales were up by 17.7%. And finally, in San Diego, we saw a rise of 12% to $645,000, sales increasing to 27.1%. Keep that in mind as we go into the mergers and acquisitions and companies leaving California. So existing home sales rose 0.7 of a point in December. That's the highest level since 2006. And existing sales for the year were up 5.6% from November. This is the most we've seen since the Great Recession. The next thing I'd like to talk about is the area of company displacements. As you know, it was rampant beginning in March and April and going through most of the year. That's sort of been tempered for the time being. However, there were 3 or 4 companies that had significant layoffs. IBM displaced 10,000 people in Europe. Disney, which across the country, not necessarily in Florida, across the country, eliminated 32,000 jobs, which is significant. And Southwest Airlines laid off 6,800. And a company called Instacart, grocery delivery service, just cut back 1,900 people on Monday. Now, the productivity report only comes out once a quarter, and the data is not out yet for the 4th quarter. So we'll have to wait to get the data, hopefully by February's report. Okay. Next. This is my favorite area, mergers and acquisitions. Again, last year was another booming year, and we expect it to be strong again this year. And people that focus like Gary Goodrum in the area of small to mid-sized companies, there's going to be a lot of activity taking place because, as you know, the organic sales for companies has been flat to declining in some cases. So you're going to see a lot of companies wanting to merge or get acquired. So first of all, let's take a look at Home Depot. They're expanding their business portfolio. They bought HD Supply, which is catering company, and improving what they're trying to do going forward. So this is good news on their part. Simon & Schuster was sold to Random House for $2 billion. This acquisition will create a book industry supergiant so long as it clears the antitrust hurdles. Now, keep in mind, as we go through the different areas of the country this year, you're going to see more consolidations in vertical markets and sectors. It's going to continue on for the time being, which is not good from the standpoint that it's going to displace a lot of people. So Peloton, for those of you that like to have a gym or go to the gym, which I can't go to because it's closed, people are buying equipment. They're buying barbells. They're buying everything they can right now treadmills, etc., and they're putting them either in their garage or in other areas of their home. So Peloton is out buying companies right and left. They just bought a company called Precor for $420 million. This is a deal will close by the end of the year, and it's basically involved in workout machines. So you're going to see more of this going on in that place, because a lot of people, I can tell you right now, that have memberships in gyms may not go back to the gyms any longer. They'll stay at home and they'll work out at home, just because it may be a new way of life with the gym area. You may recall we talked about 24-hour fitness. A few months ago, they filed Chapter 11 bankruptcy. They closed about 140 locations, and those locations are gone. They're going to be coming out of bankruptcy soon, and we'll have to see what impact that's going to have because of the coronavirus, when and if people will go back as they were before. Staples has offered another deal to buy Office Depot's parent company, $2 billion. You may recall this is the third time that Staples has tried to acquire the company, and it's been blocked twice by the FTC. So we'll see what happens. The last time was in 2016. Adobe continues the acquisition trip. They're buying a company called Workfront for $1.5 billion. Workfront is a solution marketers that relies on everyday efficiency to manage content, plan and track marketing campaigns, and basically execute complex workflows across teams. So this is just another addition to their portfolio. Salesforce, as you know, has been buying companies over the last 3 or 4 years on a very aggressive time frame. And what they did is they bought a company called Slack for $27.7 billion. And Slack will basically be the third largest acquisition in this space, in the software space, in the history of the industry. If you recall, back in 2019, IBM purchased Red Hat for $34 billion. And of course, our friends at Microsoft bought LinkedIn, which all of us use, for $27 billion. So that's going to continue. Facebook has acquired a company called Customer Incorporated. This is a New York-based software company that helps businesses manage your customer conversations with multiple services on one dashboard. So the deal is valued at about $1 billion. And Facebook is now starting to buy other companies as well. If we look at Lockheed Martin, they're buying Aerojet Rocketdyne. There's more consolidation taking place in this space. Mike Carl, who's on board, we worked for TRW for 100 years. You're seeing more of those companies have disappeared, and there are going to be more consolidations in space and defense going forward. In the financial services area, for those of us formerly from Silicon Valley, we saw that Silicon Valley Bank acquired Private for $900 million. Silicon Valley Bank basically provides technology startups and venture capital firms services. So the deal will marry an area banking giant with a heavyweight management firm out of the East Coast. So this is a big deal for the banking industry. So that takes care of the acquisition area. And again, there's already 5 or 6 that are taking place this week that I'll report on in February. Now let's take a little bit of a look going forward is what else is going on out there. So Amazon is basically launching what they call Amazon Pharmacy. As you may recall, about a year ago, they bought a company called PillPack for $753 million. They're going to get involved now in the acquisition of the prescription medicine delivery services. So they're going to compete with everybody else in the market. Every time you turn around, you turn the page, Amazon is opening up a new channel of distribution for marketing. It's unbelievable, and they've been very successful for the most part. If we look at the Boeing has had a tough 2 years financially, as well, with their aircraft. They finally got approval to relaunch and fly again the 737 MAX. As you may recall, back in March of 2019, after 2 deadly crashes, that plane was grounded. But that plane will be back in the air. For those of you that like and play musical instruments, such as my friend Chris Caliendo, you'll find that Guitar Center, the largest U.S. retailer of music instruments and equipment, has filed bankruptcy after spreading coronavirus pandemic has kept customers at home, and job losses have made it less available for people to afford new gear. So they're in a turnaround situation, and their stores have been closed since last March. So there's very big concern that they may not be able to come out of bankruptcy. Well, we'll have to wait and see what happens. That would be a terrible loss. Tesla, who's always in the news, announced recently that they're recalling 9,500 Model X and Y vehicles. that have problems with their roofs and with bolt issues. So this is underway right now. Now, in the media area, those that are interested in journalism, et cetera, the U.S. media had tremendous losses last year in 2020. The fourth quarter saw 29,000 jobs eliminated in that particular space, which is unheard of. If you look around at companies that have the TV stations, a lot of them are eliminating channels, different things like ESPN is going to get rid of 7 or 8 channels. They've had a lot of layoffs. So you're going to see more of that taking place as the demand in the marketplace changes. So here we go. So let's start off with software giant Oracle. Oracle announced, my friend Larry Ellison, for those of you that know Larry, they're moving their corporate offices to Austin, Texas. And they've also indicated that at some point in time, after this deal takes place, they'll start moving some of the business units out of Northern California to Texas. In this particular case, they're going to Austin. Manufacturing jobs. Good news here. Since last April, the United States has added 764,000 jobs in this marketplace. And this is great news for that particular industry. More jobs are coming back, but more jobs are being created as well. So this is very good news for manufacturing. Now, there's a company involved in financial services. It's called Colony Capital. They're moving their headquarters from Los Angeles to Florida. And the idea here is they're saying this is the next second financial institution to move a powerhouse because of seeking lower taxes and costs. Keep in mind, the cost of living in California is pretty high, and a lot of people can't afford to live here or will continue to live here. Therefore, companies are going to continue to leave. Last year in Silicon Valley alone, including Oracle and everyone else, they lost 10 companies have moved out of California, which is unbelievable. Now, the one thing I didn't mention is Hewlett Packard Enterprises, the global, the second half of the company, after the split, they're moving to Texas, somewhere north of Houston. They've also said that they will be moving some of the other business units once they get established in 2022. So we're going to continue to see more of that. In the automobile industry last year, it was the worst on record. We saw a downturn of 15% in 2019. That's one of the worst that we've seen. For those of you familiar with Costco, they've made a decision. They're going to be closing all their photo centers and shifting services to online business. So services that are being continued would include like passport photos, ink refills, photo restoration, and home video transfer services. So some of those services will be able to be purchased online. That will take place beginning on February the 14th of 2021. And finally, we have Apple. Apple, as you know, is an interesting company in itself. What they're planning on doing is developing a new series of Mac chips that'll be introduced early in 2021. And the idea is aimed at outperforming Intel. Apple wants to create and build more chips in the technology space, and in some cases will eventually compete with Qualcomm. So that's kind of where we sit today in the industry. I wanted to take you through everything for about 20, 25 minutes, and then I'd like to open it up for Q&A. So now it's your turn. Okay, do we have any questions?
Hi, Dennis. It's your buddy Chris
Hi,
here.
Chris. Yes.
So just going through your meteoric presentation, in many respects, we fast forwarded 3 years into the future because of COVID. And with e-commerce up, 49% during the 75 days of Christmas, I noticed the US dollar index is trading down a bit. If US dollar continues to lose value, I don't think that can be good. Can you comment on that?
Yeah, I agree. I think the concern is now, and I have no idea what the how much money is out there. I mean, there are just trillions of dollars out there. It could be anywhere between 20 and 30 trillion. The value, as we print more money, the value goes down. But the thing is, as Janet Yellen said the other day, they've got to stimulate the economy. They've got to put more money in the field for people. And if you don't do that, we'll go into a serious, strong recession. So that's going to continue for the time being.
Yeah. There was a report that there are more people in the United States today have more money in their savings account than ever before.
Well, there's not a lot. You can't travel. You can't go anyplace.
Yeah.
And the good news is, I think this morning in the state of California, for example, one of the companies is going to be situated here. I think it was It wasn't Anthem, it was the other company, but they said they're going to be now in charge of the distribution of the vaccines. We've got to get the vaccines out and distributed all over the country as quickly as possible so we can start moving things in the right direction. That's what's killing the economy. But I think as we go into the second half of the year, the first 6 months will be tough, but economists really believe that as we start moving into the second and third quarters, it'll be much stronger, including going into 2022. So those are positive things to think about.
You know, our friend Steve LeBlanc is part of a team of scientists that are trying to pass through the FDA a device that allows every citizen to check in real time if they have COVID. And you can imagine how difficult they are having to try to get that through the FDA. But preventive care is going to be a big thing. And I know Apple's working on those technologies as well. Right. But the physicians don't want, you know, the American public to have access to taking care of themselves. But
you know, keep in mind, here's what's going to happen. If you look at where we go industry-wide, we're going to see more things happening in the biotech space going forward. There's 2 or 3 companies, Johnson & Johnson, I can't tell you who the other ones are. They're very close to coming to market with their products. You're going to see a lot of things happen. Let's look. When we had 9/11, the airline industry and travel has never been the same, and it never will be again in our lifetime, okay? Number 2, because of what happened with the COVID virus, it's going to change everything. Hopefully restaurants will be cleaner. They'll be safer to fly, taking cruises. I mean, there's a lot of positive things that could come out of this from a health perspective going forward. So, I mean, there's a lot of good things that'll come out of this problem. The sad thing is we've lost a year. You realize that? In March, it's been 12 months. You might as well have gone to sleep and woke up after 12 months. I mean, it's been a disaster. And so I never thought we'd see in our lifetime anything like this happening. Sad state of affairs. But like I said, you've got to look at some of the positive things coming out of this. And I think there'll be a lot of good things going forward. A lot of new industries will come about, you know, in terms of the virus vaccines and everything else. There's a lot of things. You know, there may be another vaccine like Corona coming down the road in 3 or 4 years. Who knows? You know, they're going to have to continue to look to develop new kinds of vaccines for things that are in the future that they're well aware of. So this is it. The good news is I worked in a biotech company, and it takes so long to get a drug approved. If you go to Genentech, it could cost taking a particular drug from what I would call womb to tomb, in other words, from the very beginning to the end of its launch, it could take 7 to 10 years to get the product approved. The FDA process is broken. The good news, Siege, and they're forced to move in a hurry. Now, hopefully that will change the way they operate going forward in the future. And to me, we need that because number one, not only do we need it, we can't compete with people from India and China and every place else with bringing drugs to market that meet the criteria that we have. We've got to expedite the process. Mr. Conklin, are you there?
I am.
Speak to me.
Bruce.
Hi. Hey. So I think the government has got to put out rosy thoughts, but you know, I spent many years in the real estate business, and one of the reasons that we're forgetting why we had such good sales in the last few months is that if you're buying a new house, the rate you get on that house is lower than if you're refining the house. So there's an amazing pressure on people. If you can get a 2.5% 30-year loan, you're going to do everything you can to get a piece of real estate.
That's right.
What's working against us is that if and when this economy opens, and it opens 2 ways. One, we don't put out stimulus money just to make payroll. We put stimulus money to grow business. Well, you can't suck and blow. So if you're going to shut things down and you're going to overregulate, then the stimulus money is just unemployment money. Okay. And that's been the problem so far. So let's assume that money starts going really to grow. We actually open up the economy, not shut it down with double and triple masks and everything else that's going on. Okay. Real wages are going to take a long time to grow. And if real wages don't go up, what's going to, even if you keep interest rates at 2.5%, if a house costs 50 more, where does that 50 come from? You see what I'm saying? So there's
Absolutely.
always an affordability comp. So I am concerned. Now, the other thing that's going to happen is foreclosures are going to happen when people actually have to start paying again and they don't have the money.
That's right.
Those foreclosures are going to drive the market the other direction. So I'm not convinced that anybody should be speculating on real estate in the next 12 months. That's just my, and I'm a real conservative guy. I'm in my 70s, but I'll tell you, I'd be really careful.
Well,
And don't fall in love with what happened in December, because when you have, I thought I refied at a low rate. In the last, 3 months, the rates have dropped another, half
Yep.
to 0.75%. Well, then you can't say that's real demand. You see what I'm saying, Dennis? So
Yeah, but let me tell you something.
I think the real estate market concerns me a lot.
Well, here's the situation. In the real estate market for residential, there's a demand for the people, for the millennials have not bought things for a long time. They're starting to get to the point where they want to buy things for the first time and get out of apartments they want to buy. Number two, there's a lot of people that are working in white collar jobs, et cetera, that are making a lot of money. They're doing well, not the lower end of the economy. They have the money to move and get bigger housing if that's what they want to do. So you're going to see that continue. You got to remember, it's how many units are being sold. The question is how many new apartment buildings are going to be developed. We don't know that, and condominiums, et cetera. If you look at San Francisco, you look at places like New York, people have left the city. It's like they're going west, but they've left the cities. Are they going to come back? We don't know. But I think in terms of buying real estate, if it's an affordability issue, California is a real problem. I mean, you can sell your house here and buy a castle in Texas or Idaho or other places because you get enough money to do that. But there's a tremendous demand for properties here. The other thing is there's not a lot of property on the market right now. And people that have had their homes for 20 or 30 years and they sell their home, they're concerned about paying capital gains taxes. So there's all kinds of issues facing that, but the market is strong because there's a lot of demand by buyers. So, I mean, at this point, I haven't seen any signs that indicate that the residential real estate market's going to have a problem going forward. It's all based on affordability. And you got a lot of people coming out, the millennials and the ones behind them, they want to.
But see, Dennis, that's where I said you have to have real wages increase.
That's right.
And I don't think real wages have increased at all. As a matter of fact, I think they've decreased. A lot of people have had to take pay cuts to stay employed.
Yep.
All I'm saying is I would, beware. That's all I would say is because there's so much it's going to take 2 years to shake all this stuff out.
That's
right.
Right.
It's not just put out $2,000 to every person, and the problem is that people that are at the top, and it's no knocking anybody, but they're not smart enough to figure this out because it's not like we've gone through this kind of stuff before. I don't think anybody's smart enough. Okay. So we're going to make mistakes, but it's going to take a long time to shuffle through, all these different markets and where people are going to work. I'm not convinced, by the way, that women want to work from home with 2-year-olds 24/7. So, all this lofty stuff. And right now they're in a 2-bedroom apartment working at the end of a tiled counter. It's not automatic that people are going to want to work from their home. They may want to get out. So all I'm saying, there's just so much that's going to shake out here, guys, that I would be real careful on making any, because if you buy a piece of real estate, that's really a long-term play. If flipping in this market, I think is risky, but if you're an expert at it, do it. But long-term, I don't know. I just don't know. Maybe we're overpaying by buying today at the value.
Well, keep in mind, if you mentioned foreclosures, the last thing the banks want are foreclosures. They don't want an inventory of houses that they're going to have to figure out what they're going to do with and how to get rid of them.
But they're all in funds. They buy these mortgage packages. They're not sitting at banks.
Oh, I know. They sell them out. Well, you recall in the 2008 timeframe, the only country that really didn't get devastated by the real estate problem was China. They refused to buy all those notes.
Well, there you go.
So what other questions do we have out there?
Dennis?
Yes.
Yeah.
David?
Hi, yeah, hi, Dennis. I'm not sure if you covered this maybe in the beginning of, I came in a little late. I wanted to get some comments from you regarding the distribution of the vaccines. I just caught a quick article in the paper this morning that it looks like Blue Cross Anthem is going to be taking some responsibility over here for the distribution.
Yep.
It's a mess, the distribution. Everybody seemed to know it was going to be a mess, and it certainly is a mess out there. What do you think?
So let me give you some insight. So I belong to what's called Ready Carlsbad. They support the Chamber of Commerce. We have people from the CDC, all the different groups, constituents are involved. We talk to people back and forth. Here's the problem. I think when they were starting to put together the distribution plan for the vaccine, it's called supply chain, and the supply chain is broken. It's just chaos. There's a lack of communication. I talked to a regional director from CVS to find out when I could sign up to get a shot, right? The vaccine. And they said, yeah, we're going to do it, but nobody's told us what the rules are. We don't know who's going to do what. We don't know when or anything else. We have not been informed. This is 2 weeks ago. So the system is broken. Now the state has gotten X amount of millions of vaccines, and a small percentage of that amount has been distributed. And that's a problem. So they're going to have to figure out a way to manage the process. Just like it's a business, and it's broken. The other problem you have is for 65-year-olds and up, they do that. So it's a free fall. So instead of saying, well, we're going to do the 90-year-olds and the 80-year-olds and the 70-year-olds, and so they haven't done that. It's a free fall. It's chaos. So you get an email from Bonds or something, you go online, and in 30 seconds, they're booked for the next 3 months. So that's a problem. And then no one knows when they're going to get more vaccine. One of the concerns they have now is, let's say that in the case of Tom Crotty, Tom got a shot last week, and in 28 days or 21 days, he needs to get the second shot. What happens if the shot's not available? Then what? So there's a lot of concerns that are involved right now. So some people are going to have to get their hands on it. California is the worst because we've got almost 40 million people living here, all through the state. So they've got to fix the problem. So now they're getting involved with the insurance companies to get involved and help direct what's going on here. And that's a problem. It's widespread, and it will get fixed, because I'll tell you, there's 3 more companies right now. One is Johnson & Johnson. There's 2 more. I can't tell you who they are. I don't remember. They're very close to coming to market with their vaccine. And once they do, there'll be more product out there. So, everybody's impatient, but we're just going to have to wait and see what happens. But it's clearly the process is broken, and it's got to be fixed. And it's been that way since day one, since the vaccine first came out. You can open up Dodger Stadium, you can open up Angel Stadium, and if there's no vaccine, don't bother to open up the place. People go online and it says it's closed because there's no vaccine. Or you go online and it's closed through June. Well, once the vaccines become more available, they will. Now, Alan Rappaport, for example, who's one of our great senior citizens, a decorated hero from the wars, he and his wife, I believe, went to Petco, and they got their shots. Never thought about that, but if you went online to the county of San Diego, you may be able to do that. So we're not sure where this is. Look, CVS, Walgreens are all supposed to be distributing the vaccines, but they don't have access right now, and a lot of the rules and the protocols are still broken. It's got to be fixed. And you're right, that's a problem.
Mm-hmm.
Mr. Carr, any thoughts?
Actually, yeah, on the vaccine distributions, to continue that theme, I just think that the government has been the main driver of the distributions, and at least in California, who has recently achieved the infamous achievement of being the last in the nation in distribution, is in fact broken entirely. I think the government needs to step back and say, here are the vaccines, and get them out to the people, and let the people like Scripps and UCSD Medical and all the other the CVSs and so forth, people who do vaccines on a daily basis, determine how to get those vaccines into the arms of the population. And we're just not doing that. And the state of California is holding back so hard on the reins in this that nobody can innovate or or get the vaccines on it. I'm with Scripps, and they keep telling me I've got appointments, but when I go to make an appointment, they say, well, there's no vaccines available at this time. Call back
Well,
later.
yeah.
So
And
I'm kind of giving up on the whole thing, to be honest with you.
well, let me tell you what, the other night I got an email at 7:45 p.m. and I wasn't on the computer because I'm up at 3 o'clock and I
Yeah.
turned it off, right? So I went on in the morning and I looked and it was gone.
Yeah.
They said they got 2,900 vials of the vaccine, and within 25 minutes it was sold out.
Yeah.
And they had 11 locations. So figure that out. So my point is there's a feeder for the product. They just need to get the vaccines out. And it's been a log jam from the state of California getting the vaccines out.
Yeah.
We've got to improve the supply chain.
Absolutely. I agree with that 100%.
So Mr. Schultz, any thoughts? He's muted. Any other comments or questions that you'd like to address? Go ahead,
Dennis,
Bruce.
This is, I was just going to say, this is from Chris Caliendo, that in the chat, the level of innovations cannot keep up with the systems we have in place today. Our testing strategy will change. Our whole system has been based on symptoms. You have a symptom, you get tested. With COVID, this system does not work. A lot of change will result into a better system in the end. You can comment?
I didn't hear that. Can you repeat that, please?
It's from Chris Caliendo, saying that the system is based on symptoms. You have a symptom, you get tested, but with COVID, this system does not work. A lot of change will result in a better system in the end.
No, I fully agree. I mean, look, look, here's an example. They have all kinds of tests. I mean, there must be, I don't know how many tests they're running right now and what the credibility is of the test. How long does it take to get a response? It's all over the place. It's right now, they're just trying to throw things out against the wall to see what sticks. So it just depends on how you get the test. What are they testing? How long does it take? I'll give an example. I heard yesterday that if you decide to go to Hawaii from LAX, you need to get there even earlier, and they have to give you a test. And it takes about 35 minutes to determine if you're negative or if you're positive. If you're positive, guess what? You're not going to Hawaii. And they're starting to do that. And the tests are supposed to range somewhere between $50 and $150 per test, depending on which airport you're going to go to. They've also said that at some point in the future, that if you don't have a vaccine card that says you've been fully immunized, you're not going to be on an airplane, you're not going to be on a boat, you're not going to be able to do other things. So, I mean, this is what's going on right now. So, I hate to say this, but there's a lot of information floating around out there, and it's very frustrating.
Dennis, another question regarding inflation. Can you comment on what it might look like beyond a year? Massive debt will impact at some point. This is from Bruce Nelson.
The biggest concern we have is the increase in products and services. And that's going to happen. If you go to the markets today, look, if you went hypothetically, if you bought a roll of something at Walmart, it's a lot cheaper than if you bought it at Vons or Albertsons or Ralph's. The problem is prices are continuing to go up. And in this, with a wage rate of the $15 per hour, whatever it's going to be, that's going to have a major impact on pricing as well. So we're going to see, call it inflation. You're going to see that continue, and it's not going to change. So if you wanted to go to McDonald's, you're going to pay $12 or $10 for a hamburger. I'm overreacting, but I'm just saying, think about that. So when you start looking at pricing of different things, you're going to decide whether or not this is discretionary or it's mandatory that you have to have. And that's going to have a major impact in the market. But inflation is going to go up because we've got tremendous debt. How are they going to deal with it? Remains to be seen. Look, if they decide to raise the taxes by $3 or $4 trillion, this country will go upside down. It'll be 1929. They can't do that. It's going to have to be different kinds of things in the marketplace. A lot of people don't believe we have a middle class. You're either toward the upper part or you're toward the bottom part. And there's a lot of people believe in that it just doesn't exist anymore. But the cost of gasoline, the cost of food and energy is continuing to grow by leaps and bounds. Now, you want to talk about the infrastructure of this country is a problem. For example, the more cars we have that are electric, the more people buy high-tech products and everything else, it's going to be more of a demand on the infrastructure to keep this in place. Now, for those of you that are familiar with Silicon Valley, there's a city up there called Cupertino. So about 9 years ago, these people were buying all this technology. They were having brownouts because the systems were going down because AT&T couldn't accommodate it. That's the biggest concern right now. You go to 5G and everything else. Can we physically accommodate all these changes with technology? And that's something that people are going to have to deal with going forward. But the answer is, yeah, inflation is going to go up. Question is when. Would it be in 2022, 23? But yeah, we're going to see inflation. And people are going to have to decide if they can't afford that because they're on fixed incomes, they'll have to decide what they can afford to buy and not buy.
Dennis, we have about 2 minutes left. Either somebody have another question or Dennis, do you have a final comment?
Yeah, I mean, to me, this is fun. I like doing this. You know, I read a lot. I talk to a lot of people all over the country all the time. And it's a fun thing to do. I try to do something different rather than just talk about the stock market or the election or anything else. It's really want to provide you with some insight on what's going on in the economy on a global basis and on a US basis. And so to me, we want to do this monthly. We want to have people, we want to have your input. It's kind of fun. And it's hopefully you can take the information away that will help you going forward with what we have. And like I said, in February, we're going to meet, I think it's on the 25th.
February 25th, right?
Yeah. And what I plan to do is I like to have little special reports beyond just looking at the data. So feel free to do that. As soon as the videos is available, I'll send out a note to everybody letting you know you can go online and watch it. You can share it with your colleagues and friends. We have over 100 people that are involved in the program and more want to get on. And hopefully this meets your expectations. So that's for you, Sid, in Florida. So we have people, by the way, from all over the country, from Maine, Florida, Kentucky, Tennessee. So they're all over. These are people that can get on from all over the country. A lot of the people on the East Coast, it's working time for them, so they really can't be on. So they'll be able to look at the video. So if you have any questions or there's something you want me to look at going forward, shoot me an email. But that's it. The one thing I don't talk about is the foreign currencies. That's beyond my experience. So I want to thank everybody for being on today. Robert?
That's great. We're at 9 o'clock. Thank you all very much. Hope you enjoyed it. And I echo Dennis's comments. We really value your input and your attendance. So take care. Next time is February 25th. See you then.
Okay.